Give us the 60,000 foot view.
I mean, you want to keep it simple. You save in dollars, you're destined to go broke. You're not a contrarian, you're destined to become a victim. And I think that's the truest statement you can make. The dollar is losing value precipitously. It's down 10% this year. But it's been falling every day of our lives.
Podcast twins here back in the Twin Cave. Vince, what's going on today?
Oh my God, we are back here. We got a very, very special guest. But before we get started, it's my job to remind you to always subscribe, click subscribe. Make sure you share it with everybody else. Don't forget to follow us on all the platforms, Instagram, TikTok, Facebook, everywhere you can find Podcast Twins, and especially on Spotify. So make sure you click and subscribe. And I'm going to go ahead and let Drew do the intro.
Yeah, I've been excited about this one for a while. We want to thank Andy Schectman for being here from Miles Franklin. He doesn't really need any introduction. He's all over social media. Lots of his episodes on different podcasts. He's on 15 podcasts a day sometimes, 200,000 plus views. I mean, Andy, I can't thank you enough for coming down here. You were introduced by our good buddy Russell Cohen, who has been instrumental in blowing our minds with all the stuff going on that we don't know about. So thank you.
Yeah, pleasure's mine. I'm going to have a hard time telling you two apart.
Absolutely. We get it all the time.
I'm Drew, and that's Vince.
Yeah,
and just do your best.
Right.
But, you know, if left is Drew and right is Vince, I know we look exactly.
But if you mix it up, it's okay. We understand.
Sometimes we mix it up even, so it's okay. But, you know, thank you, Jana, for being here as well. We've got an audience, so appreciate you coming down. And we got a bunch of really big stuff going on with Podcast Twins and Miles Franklin. But before we get to that, Andy, I'm going to ask you kind of to make it as simple as humanly possible, because Russ did a really good job of making it simple and straightforward. So we want to kind of keep with our audience level of understanding on this, because less than 1% of people know any of this stuff is going on.
That is a fact.
So give us the 60,000 foot view of why we should listen to Russell's advice and look at gold, look at silver, look at XRP, XLM, maybe even Ethereum, which I just learned about yesterday, and give us, you don't know that one.
Well, no, I'm watching them all yesterday and today, and my head is just pulsating.
Well, before you explode Vince's head, give us the 60,000 foot view.
I mean, you want to keep it simple. You save in dollars, you're destined to go broke. You're not a contrarian, you're destined to become a victim. And I think that's the truest statement you can make. The dollar is losing value precipitously. It's down 10% this year. But it's been falling every day of our lives since, give me an idea of what I mean. My father graduated college in 1963.
Okay.
He was married to my mother that year. He says to me, Andy, your mom and I could live comfortably on $6,000 a year in 1963, my first salary. You look at 1971. I was born in 1970. Prior to 1971, the dollar was backed by gold. So countries around the world could exchange their dollars into the U.S. Treasury for an ounce of gold at a fixed rate of $35 an ounce. And President Nixon closed the gold window in 1971 because too many countries around the world were doing that. In fact, it was largely President de Gaulle from France. He was sending warships over to New York Harbor with dollars, realizing that we were printing more dollars than we had gold backing it to fund the Vietnam War, and said, give us back our gold. And we did. But then he closed the gold window, meaning the dollar was no longer convertible into gold. It was backed by nothing but, in essence, the military and the printing press, the ability of the U.S. government to make you pay your taxes and to be able to print. So anyways, since that day, if you look at gold right now at roughly $3,400 an ounce, you can argue that the dollar has lost 99.5% of its value in relation to gold since 1971. My entire life, it's just continued to lose value. But you can show this. I could show you in relation to real estate. You go back to 1960 as an example. 1960, the average price of a house was $17,000. That's according to the Census Bureau. I think it was $16,950. I used to do this all the time. And gold was $35 an ounce. So if we take $35 an ounce and divide it into 17,000, you get 485 ounces of gold. So 1960, your grandparents are thinking, should we buy this house? Or should we take the gold that grandpa or grandma Frank, left us? It wouldn't be Grandma Frank.
Maybe some Francis. Yeah.
Well, it is 2025 now, so I don't know.
Right.
That's a different T-shirt.
Right. That's true. That's true. Anyways, so, should we buy it, take out a mortgage? Remember, my dad, 3 years later, my parents could live on $6,000 a year.
Yeah.
So 17 grand, that's 3 years salary. Okay, fine. We'll take out the mortgage and we'll just stick the gold under the mattress where it's sat for the past 65 years, earning nothing. People always say, well, gold pays no interest. Okay. So let's just see how that played out. So the average price of a house today is $420,000. And those 485 ounces of gold today at $3,400 an ounce is worth $1,650,000 divided by 420,000. That buys you 4 houses. So what I'm saying is that gold has a way of keeping up with purchasing power. We can make it more relevant. Let's go to 2005. 2005, the price of gold was $400 roughly, and a house was $220,000 roughly. I just did this the other day. So 220,000 divided by 400. It's 550 ounces of gold. Today, the house is worth 420. So yeah, the dollar's depreciated against real estate, almost halved, right? Your house is worth twice as much as it was 20 years ago.
Yeah.
So your dollar doesn't buy you as much in terms of real estate right now. But again, those 550 ounces of gold today that you could have used to buy that house in 2005 is worth $1.87 million divided by 420,000 buys you 4.5 houses.
Yeah, 4.5.
So you can go back. Let's go back to 1930. Let's go back to 1900. A $20 gold coin, what's called a double eagle. It's an ounce of gold in essence. It's just under an ounce of gold, but that was money prior to 1933 when Roosevelt confiscated gold. People were walking around with $20 gold coins in their pocket. And that $20 gold coin back then, $20 in 1930, would have bought you everything you need to look perfect at a wedding. A suit, a tie, shoes, maybe even an overcoat if you're up north. The whole 9 yards, right?
$20.
$20. That, and remember, a dozen eggs back then was a nickel. And, so that was a lot of money back then. So $20 today doesn't even buy you a couple pairs of shoelaces for your shoes.
Yeah.
But that ounce of gold of 3,400 still buys you that suit and a nice one. The overcoat, shoes, everything.
Yeah.
And probably even some money to go,
put in your pocket.
Go put in your pocket. So gold retains its value. The dollar doesn't. That's as simple as I can.
It's pretty simple.
Okay.
It's pretty simple.
So and do you agree with Russell's assessment that there's going to be some sort of event sometime in the fourth quarter, whether the power grid goes down or there's another war or a bigger war, because there's plenty of them going on right now anyway, that at that point the great reset or the great taking is going to happen because the system has gotten so far into debt, 38 trillion, 40 trillion, it's just a pie in the sky number that no one can even really fathom at this point.
I think it's a mistake to pigeonhole yourself into the fourth quarter. I would say mathematics rule and the math of it, the inevitability of it is real.
In the next 2.5 years sometimes, because that'll be 250 years for the U.S.
Yeah, that would actually be next July 4th. It'll be the 250th anniversary of the country. But I think the timing of it is less important. You'd rather be 6 months or 6 years early than 60 seconds late in that environment. regarding the Great Taking, that's a book written by a man named David Rogers Webb. I would suggest everyone read it. And if you don't want, and go to thegreattaking.com and download it for free. You can read it in a day. It's easier to go to YouTube and look for David Rogers Webb, The Great Taking. He narrates it in an hour. It's a very, very frightening book. It talks about the changes of the Universal Commercial Code and how just about everything you own in a certificate form is really not yours, that you are subordinate to the custodian.
We're the podcast twins. I'm Drew. That's Vince. Gold and silver aren't just history, they're security. That's why we partner with Miles Franklin.
And if you just call 952-929-7006 or email them at info@milesfranklin.com, tell them that the podcast twins sent you. You'll get preferred pricing and you'll get very well taken care of by them.
Real talk, real value, Miles Franklin.
In other words, whoever holds that, JP Morgan, or whoever holds it at the DTCC, which is where all the securities are centrally held, has priority over you. It's getting a little deeper than you want me to get right now. But in essence, when you buy any account, when you have any stock brokerage account, you are on margin. Whether you know it or not, you have to specifically tell them, don't put me on margin. What it basically means is when you open an account, if you don't do that, they can lend your shares out to other people. Mm-hmm. And if those other people default, the custodian, in this case, whoever lent it out, JP Morgan, whoever, is primary beneficiary. You are subordinate. You are second in line. In other words, you're screwed. And it's real. And it's held up to challenges that during the great financial crisis, there was a court case. It's held up. It's thegreattaking.com. You should read it. Now, in terms of a reset, mathematically, yeah, there is a probability we will see it. And you could argue with the Genius Act, we've already begun to see a new monetary system where you have the stablecoins that will all be backed by U.S. Treasuries, because the demand for U.S. Treasuries has fallen. And so this is a synthetic demand for it. But let's make it real simple again without trying to be too complex, because this stuff is complex, right? But indebtedness, you mentioned the $37 trillion in debt. That excludes Medicare, Medicaid, Social Security, and government military pensions. Those numbers alone exceed $150 to $175 trillion by the government's own admissions. So you put it together, we're north of $200 trillion in debt, but people don't understand how big a trillion is. So, you had mentioned that you've been working for the state of Florida going on 30 years and you're close to retirement. In that 30-year period, you've made $1 million or more. You may not have saved it, but you've made it. Yes. Right? And so the point of it is that when you go back and look at your entire length of doing business or working as an adult, from the time you were a kid, you probably made pretty close to $1 million somehow, some way, in retirement, benefits, and all this stuff. Do you save it? Maybe, maybe not. But the point of it is that $1 million is within reach of people to make in their lifetime. Right. So trillion sounds similar to it, but it's so big people don't quite get it. 1 trillion seconds ago was 31,688 years ago, where Neanderthals were stalking the plains of Europe. And when we talk about a $200+ trillion debt, those are numbers that are pretty much past the ability to pay for in an environment where we've offshored so much of our manufacturing. And with the advent of AI and what it will do to white-collar jobs, it will kneecap them. My son, who now works for me, was an accountant at Price Waterhouse, earning $75,000 a year to analyze a real estate investment trust balance sheet. Why you need to pay a kid $80,000 a year with benefits and all of the problems that go along with an employee when AI will analyze that balance sheet like that for free? Yeah. So jobs like this will be eliminated.
Yeah. Well, I mean, they're talking about how it's going to eliminate trade jobs too, like window washers. They're building these robots that are going up and down. No more scaffolding, no more harnesses. The robots are drones.
Heavy-duty insurance.
They got the drones and they're just flying up, washing the building's windows.
I watched one laying cement. I don't even know how you put it, but making a sidewalk. And you got 3 or 4 or 5 guys that pour in the cement and they're scooping it. This thing just goes zoop, 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 and it's dropping the cement and smoothing it out all in one I mean, it's crazy.
I saw the same thing for mowing your lawn, like almost like a Roomba.
Yeah.
But it mows your lawn, and you can program your
that's
dimensions.
out right now.
That's what I'm
right
saying.
Now.
That's what I'm saying.
So you talk about they have that on golf courses. Actually, I've seen that. They also have. I've seen mowers on golf courses like that in Baldridge. But all of these things are happening, and so when you realize that creates a problem in just employment, where 60% of the country has no college degree, and things are changing, and inflation is accelerating, and all of these things are happening. I think it's time to think like a contrarian. It's time to think outside the box, because I don't think it's going to get any easier. I really don't.
Well, I mean, I know people that toy with the idea of getting some land and building a compound and having some of their friends and families and raise each other together and grow food and get cattle and pigs and all these other things. I mean, is it the point where you got to go so far contrarian to, avoid AI taking over, that we're going to need to go back to, maybe like the late 1800s or early 1900s, where we're kind of doing all that stuff on our own?
Look, there's a part of me that thinks that sounds great. I don't think it's necessary. I don't think the world's coming to an end, but there is something to be said for being off the grid that way, being being able to take care of yourself. But let's hope it doesn't come to that.
Sure.
But I think being able to grow your own food regardless,
absolutely,
it is a big deal. I mean, it is. I think it's a level. Look, to me, farmland, a working farm, is one of the greatest assets you can own on many levels. The problem is farmland has gotten so expensive over the years.
Bill Gates bought it all.
Bill Gates,
and China bought it all,
and owns the majority of all the farmland in the United States. What does that tell you?
It's not good. It tells me it's not good.
That's
scary.
Yeah,
that's scary.
Yeah. That tells you it's a lot of Monsanto going down, so the bear can.
But I mean,
sell you some medicine to fix what Monsanto did. Wait a minute, they're the same company. Sorry, but
that's the way that it goes. I mean, you could talk about people say, well, why doesn't silver? I mean, it's the same thing. So silver has been suppressed for a very long time. Now, the reason I believe it's suppressed is for the military-industrial complex. There's 500 ounces of silver in the guidance system of a typical cruise missile, and whether you're talking Hellfire, Patriot, Tomahawk, and I have a client at the Department of Defense who has validated this for me, and I've given lots of talks about it. And so they used to publish the silver supply or uses for military in the Silver Institute numbers. They stopped doing it. And we've had about a 200 to 300 million ounce shortfall for the last 5 years in a row on silver supply versus demand. And there are 8 Western banks that hold the price of silver down and have for a very long time through what's called naked concentrated shorting. JP Morgan was fined $920 million 3 years ago for doing just this. They admitted it. And yet they're still allowed to be the custodian of the world's largest silver trust, SLV, along with BlackRock. So why do I say this? What you just said? Because think about it this way. Who owns all the military, the weapons manufacturers? In essence, it's BlackRock. And they own them all. At the same time, they're the primary custodian with JP Morgan of the world's largest silver trust, where you need to hold silver down in order to make high-tech weapons. You have 8 Western banks doing this. The largest concentrated short position of any commodity ever traded in the history of the COMEX market is in silver. The same thing is similar in London, where the price is set. Why would they do it? Because they need to keep the price of silver down, and even more than that, they don't want people to go and buy it and make it very hard to get. They need to make high-tech weapons in order to sell all around the world and blow up places like the Ukraine. But then who gets the reconstruction contracts? BlackRock. Right. So it's the same thing in a different thing, it's the same wolf in different sheep's clothes in this case.
Yeah. Follow the money and the dollars make sense, right? That's what we say.
The money is just a circle because it's all coming back.
So you started touching on silver, And, Russell said something in the last podcast where he said, silver's, maybe even a better hedge than gold, because if gold starts going crazy, silver's going to follow it. Is that kind of your estimate as well?
90+% correlation in their movement since the beginning of time. Not always in perfect symmetry, but as one goes, so does the other. Okay. If you've ever gone water skiing and you go, when the boat turns, the rope kind of loosens a little bit and you go way around and it's that slingshot. Yes. So typically gold goes first and silver slingshots past it and beats it on a percentage basis. That's the way that it's typically gone. And you're right. If gold gets too expensive, they say that gold is the metal of kings and silver the metal of people. And so, I think from a standpoint, the word that I would use is asymmetrical, meaning the lowest downside and the highest upside of any asset class I've ever seen, ever. And it's disappearing in nature. Like your skin is epidermis, silver is found in nature in a form called epithermal, right near the surface. The big deposits were found decades ago. And
so it's in shorter supply.
It's coming out of the ground right now at a 7-to-1 ratio to gold. It's mining ratio. It's geologic ratio. For 5,000 years, it was 16-to-1, as was its price. Now, because of that suppression that I mentioned, where the West wants to make high-tech weapons to rule the world, kind of got to keep silver cheap in order to do that. It's coming out of the ground, or it's being priced right now at what is the current ratio? The current ratio right now is, let's call it 3350 divided by 38. So right now it is 88-to-1. It's been there less than 1 or 2% of the time in all of human history. When you talk about asymmetrical, coming out of the ground at 7-to-1, priced at 88-to-1, being suppressed because the West needs to make high-tech weapons. The one thing that the West never counted on is the coordination, the motivation, and the sophistication of countries like India, China, Russia, Saudi Arabia, who are now wise to what the West is doing and are using the Western suppression against them, standing for delivery. The contracts on COMEX and in London, the London Metals Exchange, which is a 140-year-old exchange, the oldest in the world, have delivery options. So this is where no one ever stood for delivery my entire career. Rarely, like 1%. And now they're all standing for delivery. Huge amounts of delivery. So instead of the rest of the world just going along with the West's ability to control the commodity prices so they can do things like become the military industrial complex and make these weapons and rule the world, they're like, okay, we see what you're doing. So you guys go ahead and short the paper price. We're going to stand for delivery. We're going to buy contracts and stand for delivery. So you're seeing massive deliveries happening in London and the United States where the biggest money in the world is taking possession.
Delivery meaning they're taking the actual metal.
Yes. Every futures contract has that ability. Right. So like if you bought a futures contract of oil, you could, if you had a warehouse, say, you know what, I'm going to stand for delivery, and they'll deliver barrels of oil to that warehouse.
That's crazy.
So you can't have a futures exchange that doesn't allow physical delivery, or it delegitimizes it. It's just a paper scam.
Right.
Kind of like the dollar's a paper scam. It's like it's lost 99.5% of its value in your lifetime.
Yes. Well, it's like if every one of these objects were actually backing a contract.
Yeah.
And you could trade them and move them from one shelf to the next, because this is your shelf, my shelf, his shelf, just move them back and forth and settle in cash. That's the way they normally go. But no, you know what? I want the gloves. Send them to me. Instead of just settling in cash and give me the money, I want the gloves. And that's in essence what is changing. All of a sudden you have a large level of sophistication and coordination. These countries in the global south who are sick and tired of the West being able to rule the roost, at the same time destroy the value of the dollar, which they're doing, as we've just talked about. So instead, they are slowly accumulating assets which are worth more than the dollars that are used to accumulate them.
Right.
They're doing what I'm saying. Don't be left holding the bag in a currency that is by design meant to lose value every single year. I did an interview with a woman named Judy Shelton. I said she was the head, or she was Trump's nominee to run the Federal Reserve. I said, Judy, who the hell came up with the idea of 2% inflation being normal? I said, why not have zero inflation? Because the lower inflation, the higher your standard of living. And she says, actually, she said this to me. She said, actually, it was Janet Yellen and her husband who argued that if you have stable prices, so think of your business. If prices never go higher, you can't give someone a raise, because as you give them a raise and prices never go higher, you never adjust your prices, you start to lose money. So she's like, instead, what we decided was to strive for a 2% level of inflation. Prices go up or the dollar goes down by 2% every single year, then you can give your employee a 1% raise and they think that they're getting ahead, but they're actually going. She actually said this. I swear to God, she said it on my podcast.
Another government scam. We're so shocked.
Right. So
big surprise.
You give someone a raise to make them think they're getting ahead, but they're actually losing ground.
Right.
And that was actually the reasoning behind what they admit to, why the Fed mandate is to strive for stable prices, but they strive for a 2% inflation rate instead of just stable prices. Wouldn't you rather have prices that don't go up all the time on the stuff that you buy?
Well, they're definitely not doing it for us, the public. Like you said, when I remember in college, an entrepreneur class, a guy came in and said almost exactly the same thing. He said, you know what a job is? It's going to keep you just over broke. And he said, that's exactly what it is. We're going to just wait till you get pissed off enough and then say, you know what? Here's a little bit of raise. And it's going to calm you down for another 6 months to a year. When you get riled up and ready to leave again, we'll do it again. They keep you just over broke, where the company is constantly making.
Well, think about what I said about my dad. $6,000 a year. He and my mom, as newlyweds, could live comfortable in 63. So
and have as many kids as they wanted.
Well, right. At $6,000 a year, you're making $500 a month.
Yeah.
Okay. And living comfortable for a year. I mean, good luck on that now. So the point of it is that so they
that doesn't even cover car insurance anymore.
How much of a raise would you have needed to receive every single year? 1% ain't going to do it. So the point of it is that saving in dollars is the worst possible thing you can do. And this is why the wealthy people, they have decent sized bank accounts, but if you look at where their wealth is, it's in the form of assets. Assets make you wealthy. Assets feed you, liabilities eat you. And so when you talk about cryptocurrencies or precious metals or any asset, land, it's the accumulation of assets that make you wealthy. And those assets go higher and higher and higher in value in the face of a dollar that's going lower and lower and lower and lower. So it's not that gold goes higher. It's not that anything goes higher. It's that the dollar that we measure it against is falling. So let's just pretend the edge of this table is a bathtub and the water underneath it is the value of the dollar. So here's my ounce of gold right here, sitting on the ledge of the bathtub. And the value of the dollar through inflation is going lower and lower and lower and lower and lower. So did the gold price go up, or did the dollar which we measured against go lower? And it's the same exact thing. Go as far back as you want to go. The dollar doesn't purchase you as much anymore because it is being inflated away by a government who has the ability to do so without something like the gold standard, which says, no, you can't print any more money until you add more gold into the pile.
Right.
So there's nothing backing the politicians' desire to print money to get reelected, to fund stupidity in terms of the things that we give it away for. And then you get a group like Doge come in and say, well, here's $2 trillion in ways that you can save money in Congress because of this type of ingrained stupidity in politicians' heads, where you have to give money to special interest groups or all hell breaks loose. They only agreed on $85 billion in savings. That's 38 hours of government spending. 38 hours. That's it. So when you talk about, holding your wealth in dollars instead of in assets, you have to realize that this is why wealthy people don't have all of their money in cash. They have it in real estate, in cars, in precious metals, in cryptocurrencies, in stocks, and jewelry, all sorts of things that appreciate.
Don't forget art.
Art, all of it.
The art scam is the best. I mean, the art investment is
well,
the
that's
best.
the thing. Art, the value of art is, unless it's like a Picasso or a Rembrandt or something like that, is too subjective to ever, I think, be liquid. You talk about assets and liquidity. Sometimes there's a disconnect. So
I thought art was just a way to launder money.
okay.
Isn't that what they do with art? It's a money laundering thing.
It's a yes.
Am I not allowed to say? Is this for entertainment purposes only? That is all right. Sorry,
but
it's facts.
That's just the point. Is that when we want to get ahead. So I'll use that in my own personal example. I come from absolutely nothing. My parents come from nothing. When we started this company 36 years ago, my dad's middle name is Miles, and his best friend, Franklin, middle name, lent us $60,000 to start a company in an office this size or less before the internet.
And you mean the size of the twin cave right here, yes, not the whole, yes. Not the whole space.
The size of a big closet.
Just right here. Okay.
My parents sold their life insurance policies at the same time on a wing and a prayer. We were stuffing envelopes, printing out a newsletter every quarter on a word processor. There was no internet.
Right.
There was no email. And it was when I think about the prospects of reaching success, it's daunting. I can't even imagine what we went through in trying to duplicate it. But my father said to me, "You'll buy something every 2 weeks or I'll fire you. That's the only rule. I won't let you make the same mistakes that I made as a younger man." He was teaching me to buy assets. So he won't fire me anymore, and he's been retired for 2 decades nearly. But I have honored my promise to him, and it was the greatest gift I've ever been given. Yes. Ever. Yes. To understand the laws of compounding. You don't get pipes like this by just working out for a week or two.
Right.
It's a continual, habitual, regimented thing of continuing to build whatever, whether it be wealth or bodybuilding or relationships or knowledge. It's a continual process to learn the laws of compounding, to have them work in your favor instead of against you, is something most people never learn. And it was the best gift I've ever been given. And so every 2 weeks for 36 years, I have bought, whether it be 1 ounce of silver or whatever, and I've never missed a 2-week period. And it's the best gift I've ever been given.
That's awesome.
To learn to pay yourself first, because, here you are on the eve of retirement. You don't feel, other than a little gray right here. Yeah. I'm sure you're still in your mind think the same way largely you did about a lot of things when you were a younger man. I do. And it's like, how did all of a sudden the concept of retiring even pop into reality? And I feel the same way. I'm going to be 55 years old in a week or two. And I'm like, where did that time go? So for 36 years, I have paid myself first. And my dad has a great analogy. He's like, life is like a roll of toilet paper. When you're young, you don't notice the spinning or the passage of time. And you're going to be young forever. But as you get older, it starts to spin and you start to see the cardboard and it's going faster. And you wake up and, holy shit, I'm going to retire one of these days. Yeah. Or I'm going to be 55. And time catches up on all of us. So if you don't pay yourself first, if you don't prioritize the compounding of time, of effort, of interest in your favor, you lose. But it is truly the easiest thing to do if you start young and understand the virtues of compounding and letting the laws of compounding be your friend instead of, like everyone else we know, their enemy. And I think that was the best gift I've ever been given, ever. Truly, honestly, God, the best gift, because, you do anything for 36 years, every 2 weeks, you look at it, holy crap, where'd all this come from?
Right.
It's because and it's just like working out. It just becomes part of your life, part of your ritual, part of your routine. And if you want to make it simple, that is the simplest thing I can explain to you as to how you become successful and how you become self-sufficient.
Those are our best 2 words. Right here in the cave, compound interest. We always say in every episode, those are the best 2 words in the English language.
Or compounding of time or of effort.
Yeah.
The compounding of anything in order to benefit your future self. Most of us are too short-sighted to believe in the future. I smoke cigs, 4 packs a day. I'll quit sometime, people say. And then all of a sudden you wake up and you never quit and you're too old.
Right.
But it's the same thing with anything. Yeah. Just start somewhere.
Yeah.
Even if it's a $10 bill or a silver coin or whatever it is, every 2 weeks, get in the habit of it. And then as you have to think like a wealthy person to begin with. You look at pro athletes, they don't think like pro athletes when they're pro athletes. They think like pro athletes the day they start playing baseball or football. The minute they catch a ball, and everything that goes into it, taking care of your body, working out, practicing, doing all of these things are all part of getting to that point of calling yourself successful or a pro. Right. Same thing is true.
So what's the best way to get started? I mean, do you work with clients of any size? Like if Vince wants to move part of his retirement account into gold and silver, or like my dad is 71 years young and he wants to buy some gold and silver for his grandkids for their birthdays.
Yes, we work with all different kinds of clients in every capacity. We have no order minimum. And we're about education first and foremost. Okay. We've done it now for going on 36 years. We've done over 12 billion in sales. We've never had a customer complaint. And we started from nothing. Literally nothing. And the compounding of effort in the form of my business has gotten me to where I am too. And so we have no preconceived notions. And, I remember one of my clients many, many years ago who lives in this state, who started out, very, very, very small, and he ended up winning the Florida State Lottery. Now, I'm not saying, and then became a monster client.
Okay.
I learned at a very, very, very young age that you treat everyone the same, regardless of how much they want to spend. You never know where it leads, or maybe they're just testing you out, or maybe their uncle is a multi-gazillionaire. You treat everyone the same. So we do. Okay. We have no order minimum. We take the time to educate you, whether you're spending 10 million or 10,000 or $100, whatever it is. We are there to earn your trust, earn your business, and help you understand the dynamics of monetary policy, fiscal policy, economics, geopolitical events, all of these things that we do on our YouTube channel, and have been now for 5-6 years. I've personally done north of 5,000 YouTubes, and I do them specifically to educate, kind of like you guys are doing, and the rest follows.
That's incredible. I tell you what, even when we were talking with Russ, one of our misconceptions is, and I was going to combine that with what you were talking about as far as the educational process of people starting to pay themselves first, or that is a concept that most workers do because they think, oh, I have a 401k, I have a this, that, and other. But to actually think about it in the form of metals, because that's not historically taught, whether you're talking about in schools, colleges, I don't care where it is, that the metal itself, because it doesn't pay interest, that's not a thought. And I know that I never had that thought until probably 12 years ago. And when I have a friend that is really into metals and introduced me, so now I got a little jump. But it's a concept I never thought about because, again, historically, you put it in the stock market, it's going to pay you 8 to 10% a year.
Get a mutual fund, buy life insurance.
This is what you do.
I mean, even if you're getting investment advice as let's say a kid or a teenager, a college student, or newly graduated or from whatever, and you get in your first job, the financial advisors don't talk about commodities.
They never do.
They definitely don't talk about cryptocurrency, which we haven't even touched on.
Why do you think that is?
Well, because they don't get paid on it.
That's right.
Right, they don't get paid.
And they used to be called stockbrokers, by the way. When I started in this industry, they weren't money or financial advisors. They were stockbrokers. And they made 1% of the trade. You spend $1 million, they make 10,000. That's just how it went. There would be 1 or 2 financial advisors in a brokerage back then, the old gray hairs in the nice suit that had been there forever. They were the advisors. The rest were brokers. Now the internet came along and Scottrade said, "How about I'll make that trade for $9?"
Scottrade, wow!
I remember.
I'll make that trade for $9.
Circa 1998, 99, 2000, somewhere in that ballpark.
The point is, at that moment, stockbrokers became dinosaurs.
Yeah.
Now, I used to be a financial advisor, and I will tell you that the Series 7 to become a broker is a test you need to study for. It's legit. It's hard.
Sure.
Yeah.
I think it's 25. I don't remember. The financial advisory test is 100 questions on how or how not to screw somebody. You could go out with your boys and get hammered the night before, walk into that test, shit-faced drunk still without studying, and pass the test. Now you're a financial advisor. Now I say that tongue in cheek, but the point of it is not, it's just a test on ethics. Now you're a financial advisor, and how do you make your money? By keeping it under management. So if I take a piece of this out to buy metals, no, you don't want to do that.
Right.
Why would you ever want to do that?
Right.
Let's just not even talk about it. If you go back for the last 25 years, gold has doubled the performance of the 10-year Treasury. It has beaten the S&P 500. For 25 years, it's averaged 9.9%. The S&P with dividends reinvested 9.6%. It's outpaced all forms of traditional investing, and yet it is ignored by the advisors because they don't make any money selling it. And so why would you look? Most advisors, and I don't want to pigeonhole them all, but many of them learn more and more about less and less till they know everything about nothing. And they think the only way to retire is to find the road paved with stock certificates and mutual funds.
Right.
And I think that's a big mistake. It's a very big mistake. And if you look at the current market action right now, which is very interesting. Now, currently, the retail investor, mom and pop, have the largest allocation to stocks they have ever had in the history of the stock market. Right now, today, 54%. That's more than during the 2000 or the dot-com bubble in 2000. They also have the largest margin position they have ever had, over $1 trillion. When you margin something, remember I was saying you're on margin. Mm-hmm. So if I have $10,000 in my stock brokerage account, I can margin $10,000. So I can control $20,000 worth of stock. If the price goes against me, I get a margin call. I need to pay money in order to not have a portion of my account liquidated. It's speculative. It's gambling. It's leverage. Mm-hmm. And so not only do you have the greatest allocation by the retail public in stocks, the largest margin account percentage ever in the history of the stock market, also the largest options involvement ever in the history of the stock market, which all signal speculation, leverage, and gambling. At the same time, just since June, now you're talking 2 months, going on 3, Jeff Bezos has sold $6 billion in Amazon stock since June 1st. You have the institutionals, which are the hedge funds. They've been selling between $2 and $4 billion a week since June 1st, every week. You have Warren Buffett, the greatest value investor of all time, sitting on the sidelines with $500 billion in cash. You have Zuckerberg and Jamie Dimon all dumping stock. You have the 3 biggest shareholders and board members from NVIDIA have sold a couple billion combined. So you put all this together, you have the insiders are moving out of equities. At the same time, you have John Q. Public and his mother fully in, all in, more than any time in history, not just in on leverage, on margin, highest margin ever, and the most option exposure ever. What could possibly go wrong is the insiders are going this way, the retail's going that way. Now, same thing is true in metals. Right now, you have very little exposure by the public, but you have, since November, the United States has become net importer of gold. We have been delivering into the COMEX market in New York more gold and silver than the United States has ever seen, ever. And I'm talking to the tune of well north of $100 billion coming in, and the biggest money in the world, and the biggest, most sophisticated, and more importantly, well-informed traders on the planet. Central banks have been gobbling up gold and silver, but now the most well-informed traders in the United States are buying gold and silver and taking delivery in New York. No one ever did that. Nobody ever did. So if I can paint a picture, going back to what I said at the beginning, you save in dollars, you're dead. The biggest money in the world is importing and taking possession of gold and silver off of the main world's main commodity exchange, the New York COMEX, more than any time in history, ever. At the same time, they are leaving the equity market in droves as the public has jumped full in. I mean, so you want to talk contrarian indicators? That's about as big of a contrarian indicator as you get. And it's not what the public is doing. It's not what the masses are doing. It's not what you think you need to do to retire comfortably. Look what the big money's doing. They're leaving and buying assets that you hold physically. The public has nothing in terms of physical assets and is all in equities. It's a very dangerous time right now. It truly is. To go back to what you said about Russell, could the shit hit the fan right now? Are we on the precipice of it? Sure, maybe.
Right.
Mathematically, maybe. But rather than try and time that, which you'll never do other than just by luck, you start to do what you can to mitigate your exposure to those types of assets right now, because that's what the big money is doing. And at the same time, start accumulating physical assets that you hope you never need to use. And if you do, you're damn glad you have it. Doesn't just need to be for an emergency. It could be an opportunity, a real good opportunity. Or if not, you pass it on to your children and your grandchildren. There are very few things that you can pass on that have sentimental and intrinsic value
at the same time.
Like things like assets.
Yeah.
Because my dad held that and I know he bought it thinking of me and meant so much to him. I'm not going to piss that away. I'm going to keep it, give it to my kids. It's just it's you go back through time, gold was mentioned over 500 times, I think, in the Bible. And through all of history, pharaohs and kings and queens and emperors, they owned gold not as an investment, but as a form of immutable wealth. So the whole idea of this discussion is gold and silver are not investments. They are wealth that outlived 2 world wars, the German hyperinflation, the Great Depression, every pandemic, and been all the way back thousands of years ago were mentioned in the Bible. And here we are, north of 5,000 years later, and the most well-funded and well-informed traders on the planet are buying it like it's going out of style. So it's not, you don't buy it to become wealthy. You buy it because it is wealth. And that's kind of what I'm getting at. It's an asset.
Well, I probably don't need to ask this question now because I was just about to ask you.
Go ahead.
Simple. So let's say 10 years ago, I started buying metals. And life is good. And now I'm in a pinch. Or I get an opportunity.
Yep.
And I've been taking delivery. I literally have a safe full.
Yep.
Is that where they use companies like yours to exchange that for that opportunity?
Sure. Absolutely. But the thing about it is that the word homogenous comes in. You mentioned you were just on the way here, you were way up north, couple towns up. If you got a McDonald's hamburger there or one right here in this town, they would taste the same.
Right.
Homogenous, same. It's like a gallon of milk is a gallon of milk wherever you buy it. Well, an ounce of gold is an ounce of gold. Some dealers will give you a better price and have a better reputation and a longer track record and etc. But the point is, you're not beholden to a company like mine. If you bought it from us, you can sell it anywhere, whether it be any major coin shop, or precious metals dealer. There's some in every city in America, all the way down to a pawn shop.
Mm-hmm.
You would be better off selling it through someone like myself, get a higher price and the wire right away, and it would be just cleaner, quicker, easier, probably better price. But yes,
36-year-old company with a great reputation.
You don't have to do that is the point I'm getting at. So you don't have to feel like, well, shit, I really didn't have a great relationship with that guy. I don't really want to call him. You call anyone you want.
Right.
And that's one of the nice things about it. It's
you could
universal.
Just sell me some of it, Vince. Well, you don't even have to. You just bring it here, and I'll buy it from you.
I really put that out there because to talk to those people, that are saying that everything's 401k based, blah, 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 cash based, investments case, that they know that if they had it and they absolutely needed to do anything with it, whether it be in retirement or have a great opportunity, that there is ways that they could liquidate that.
I'm sure.
And now I'm
sure that 99% of financial advisors or stockbrokers, like they used to be called, would tell you it's illiquid. which is actually, we found out just now, is BS.
And that's why I asked that question. I put it out there for the public.
See, that's the thing. Like if your wife said, I need to sell my wedding ring.
Right.
That's illiquid in the respect that, A, you're not an expert in diamonds. You don't know what it's worth. And where do you sell it? You're pigeonholed into a jeweler, and what they tell you you're dependent upon. Whereas an ounce of gold, whether you're in whether you're on the Bahnhofstrasse in Zurich, whether you're in the Kremlin in Russia, whether you're in the bush in Africa, wherever you are, whatever language it is, you show them a gold coin, and whatever language they speak, they'll know exactly what the hell it is. And it's been money for 5,000 years. Man has been in search of it as long as he has been a fire. Nearly. And so when you talk about it's in our DNA, everyone knows what it is. It's universal. You can sell it anywhere. There's a million legit places you can sell it, and it is more liquid than anything. So yes, whether you drive it there or ship it by FedEx with insurance and get a wire the next day or whatever, it's incredibly liquid. It's a good question. It's not like a diamond where you're beholden upon what they say. It's universal. An ounce of gold is an ounce of gold is an ounce of gold wherever it is. And it's very easy to not only get liquidity, but to make sure you've been given the right price, and that's a really, really, really good question.
Very nice.
So diversify your monies. Don't just chuck it all into your high yield savings account and getting 4%. And after you've already put your money into the 401k,
no, think about that for a second. That's a hell of a return, right? But the dollar's down 11% this year. So you're actually negative 7% return on that. That's the thinking that screws people. And it's very valid because I have some money in a high yield checking account earning 4.5%, but the dollar is down in purchasing power right now 11%. So all of us who have money in a high yield savings, we're down negative 7% real return. Where gold is up 40% this year. So 40% plus gold plus the 10% drop in the dollar, you're up 50% purchasing power with your ounce of gold. Hence, you save in dollars, you're fucked. You save in gold, you're not.
That's called winning. I believe.
Yeah.
You're winning. If you're up 50% when everybody else is down 11%,
and they think they're up 4%.
Yeah.
This is how they get you.
Right.
This is the insidious nature of dollar devaluation and inflation. And this is the highest rate.
My heart rate is up right
now. Yeah, exactly.
I forgot the tequila, Vince. I'm sorry.
I'm sorry.
But this is the part that people don't get. And they're happy earning 4.5%, but when you realize the dollar's down 11%, you're like, well, wait a second. That doesn't add up. And this is why, for example, the CPI, which should be called the CPI, excludes things like food, energy, and housing. It's not in there because they don't want you to know the real value. And like, for example, last April, it's called hedonics. When coffee was up 85%, they pulled it out and substituted it with tea because you're not going to drink coffee in the morning. If it's up 85%, you'll have tea.
Right.
No, I'm still going to get my coffee. Well, and if steak is too expensive, you're not going to eat a steak on Friday night. No, you're going to eat a hamburger. No, but I'm still going to have my steak. Point of it is we're not going to measure it in inflation. And so the inflation numbers are skewed, as are things like unemployment. The unemployment numbers, they just... In May and June of this year, they said in May we added like 285,000 jobs, and in June we added 255,000, real close to those numbers. And so the markets reacted. Economy is great. And then quietly, just last week, they revised those numbers. Instead of the 285,000, it was only up 40,000. So 240,000, we were off. And then the next one, instead of 245, we only added like 37,000. So in essence, we added about 80,000 jobs, not the 475,000 we thought. That's what the Bureau of Labor Statistics does. It lies to us because what is the dual mandate of the Federal Reserve? Stable prices, CPI, and unemployment or full employment. So we lie about the unemployment numbers. We lie about the inflation numbers so that we can create a certain environment and keep you all anesthetized thinking you're happy earning 4% when the dollar's down 11%. We got you. This is why saving in assets is far better than saving in dollars. This is why the rich get richer and the poor get poorer because of it. And it's not a mystery. It's just you got to pull back the veil and say, oh, I see. Don't save in dollars. That's it.
Well, I mean, Vince and I have been believers since we had Russ on 4 times, but now it's definitely time to get going on buying gold and silver immediately, if not sooner, right?
I'm telling you, a buddy of mine, he's been on this train for a while.
10, 12 years, you said.
Yeah, and so he was like, "Hey, I'm buying a roll of these coins. All right, I'll buy 2. You know, we got some junk silver. Okay, I'll get
junk silver is probably the best value in all of silver right now. For those who don't know what it is, it's dimes, quarters, and half dollars minted prior to 1965, and it goes to show you how money becomes worthless when you pull the real money out. So a silver dime right now is worth roughly 2.5. Well, let's see what silver is. Make it exact. A silver dime, in terms of its melt value right now, is a $38 silver times 0.715. So right now, per dollar. Right now, a silver dime has $2.75 melt value. So the dime, since they pulled real money out of silver in 1965, out of silver coins, has lost 27 times its value.
That's crazy.
There's $2.71 in melt value, but the dime is worth 10 cents.
10 cents.
Which is becoming worth less and less and less and less. This is the same thing. You save in assets, you win. You save in the silver, you win. You save in the coin, you lose. The coin that doesn't have
the
silver in it.
Yeah.
So, and it's up 27 times since 1965. Okay, that's
significant.
That's 50% per year.
Yeah.
In essence, or just under 50% gain per year. That is my point, is that saving in assets, you win. Saving in dollars, you lose. That is the truth of it. And that's the way the system was meant to be. And this is why you look at the wealthy people. They have yachts and cars and homes and jewelry and all, and art and gold and silver, because they understand the concept of devaluing currency on a continual basis. And that's what this system is all about. If they don't continue to expand, the whole system contracts and it blows up. Interest rates spike and the system blows up. And without getting too complex, this is what happens when you manipulate interest rates. When you push interest rates down to 0 on the federal funds rate and mortgages are at 3%, your house values go sky high. You can afford more things. You can buy the nicer Cadillac that you want, and for 72 months with 0 interest. You can extend yourself, and so you get greater indebtedness, but you get asset prices that become skewed because of how cheap money is. So what's your house worth at a 3% mortgage to the public?
How cheap money is. Did you hear that?
Well, it's true.
I know. I'm just saying. I saw his eyes.
I heard
when you said how cheap money is.
If you can borrow money at 3%, to buy something, what's your house worth at 3%, at 7%, 10%?
That's crazy.
So, and that's
it's little key terms like that we gotta cue the public to listen to, because that was key right there.
Yeah, but it's true. And now the cost of borrowing money is higher. So there isn't as many people who can afford to buy your house at 7% mortgage that could have at 3%.
Right.
Because now the cost of money is 2.5 times higher, or the interest rate that you have to pay to borrow that money is 2.5 times higher. So your mortgage payment is 2.5 times higher. So you might get 1,000 people that can buy your house at 3%. At 7%, maybe it's 400 people. At 10%, maybe it's 100 people. At 15%, maybe it's 10 people. Maybe just the whole market blows up at that point.
Right.
So the point of it is that if we take anything away from this discussion, which I enjoyed, I'd love to do it again.
Absolutely.
Is
study your vocabulary words. It's a lot of vocabulary words.
Save in assets, not in dollars. That's lesson number 1. And always pay yourself first. That's lesson number 1. The other one's lesson 1A. So pay yourself first, but do it in a form that is of an asset. Whether you buy silver or gold from me, do it. Buy something like an ounce of silver or some junk dimes and quarters or whatever. I mean, you can go to a shop, a local coin shop, or call me. But if you were going to a local coin shop, you could for $20, you could buy, 8 or 9 silver dimes. Doesn't sound like a lot, but if you do it every week or every 2 weeks when you get paid, at the end of the year, you've done it 27 times if it's every 2 weeks, and now you've got something. And then hopefully you think like a wealthy person along the way, and you continue to put excess money instead of pissing it away. You put it in, and I'm not going to have that other 3 drinks tonight. I'll just save it and go buy some more silver tomorrow morning. I'm not saying that that's what you need to do. I'm just simply saying that the more you think like a wealthy person and put your excess weight in assets, the sooner you do that, the better off you are. And not only that, one other thing that I really love, David Rogers' Web, The Great Taking. It's very difficult to take your junk silver. They're going to have to deal with you first, coming into your house and finding it, and then deal with you.
Right.
So the point is, you remove counterparty risk. Having physical possession of something that nobody knows that you have is worth something in a world that is becoming borderline quasi-surveillance state, with everything from our phone to our money to everything being online. And
the algorithms and the data and Planeteer you mentioned. We talked about that with Russ. But let's end on a really positive note. I want to make our announcement is that I told Vince when we started this 6-8 months ago, we're not going to take on any sponsors or any affiliate programs unless we really believe in what they're doing. He jokingly said, like, what if Coca-Cola or Budweiser wants to sponsor us? And I was like, well, I don't drink either of those 2 products, so I'd be lenient about it. Now, Vince and I might get in an argument of whether or not to take their money, but that's besides.
How about Don Julio?
Cheap money, man.
Don Julio. We talked about it. Don Julio or Patron or Lava tequila or something. I do drink a little bit here and there. I'm a lightweight though. I told you I lost 45 pounds. So I'm even more of a lightweight than I was at 5'5", 145.
It makes it a little bit easier to tell you 2 apart now.
That's the only way. It's the only way.
But Vince has to get under 250 because otherwise he can't ride the zip line at Urban Air like I was this weekend with my daughter. But yes, I
bet you that's front and center in what you want to do.
Yeah, that's my goal. I told him I got to get there. Got to ride that thing every day.
So in that realm, we do believe in what you're doing. We believe in your company. We like your content. We like you. We have inked an affiliate marketing deal with Miles Franklin and Andy Schectman. So thank you for letting us be a part of that.
Absolutely.
So why don't you be the first to tell our audience the best way to contact your firm so that they can get started and ask questions and get that person-to-person customer service, not to mention the best pricing.
Yeah, you'll want to reach out to us. We have pricing on the website. I have 75 affiliates from around the country, and I specifically I'm not a full online company like I could be if I wanted to. I'd make more money if I did it that way. But not only do I have 15 brokers that I go back to childhood with that are my oldest friends that were very successful in their own right before coming to work for me. Degrees from Wharton School of Business, private equity guys, Wall Street guys, they all left and they work with me, and they're my friends since Little League. And there's something to be said for that. I want them to be successful. I have brokers and YouTube influencers all around the country that refer us, and I want them to have the latitude to go under what the website says. If they want, I just give them a mandate, can't go higher than a certain threshold. We'll always be amongst the most competitive in America, if not the. But the best way would be to send us an email at info at milesfranklin.com. Request the price list. The price list that we have will be as good as anyone in America. We update it twice a week or so. If you find better prices, let us know. I doubt you will. We'll always try to match or beat. What affiliate name do we have you on?
Well, just remember to mention Podcast Twins.
Yes, that's.
And we're also gonna put this on the On Par podcast, which is my original podcast. That's how Vince and I actually met.
Right
because
on.
As you can tell, we're not actually twins now that you see us in person.
Really?
Yeah, I know.
We blend really close.
We're just very similar in the way that we operate in life.
I get it,
and the way that we take
brother
care
from
of our
another
family.
mother. I get it.
And, we like the same hobbies, cooking, shooting some guns, playing some golf. We like to do
I'll have to do all of those things with you.
I love that. I love that.
I had a concealed permit back in Minnesota and do a lot of shooting. I have a membership at the Delray Range. I'd love to do that. I'd love to play golf with you guys. I'd play twice a week.
100%.
But so info, milesfranklin.com, podcast Twins in the subject line. if you just want the price list, that's great.
Yeah.
No obligation at all.
Right.
And if you have any questions on anything you heard here or that you've been wanting to talk about, or precious metals IRAs, put it in this in the bulk of the email and in the body of the email. Put your phone number down. We'll contact you. We won't, if you don't want to be contacted, check your spam if you don't get something right away. 1 out of 10 emails will get stuck in a spam filter coming from a corporate server like ours. But that is the best way to reach us. info@milesfranklin.com. You heard us on the podcast, Twins. No obligation, just to request the price list. And if you'd like to be contacted, let us know.
And we'll put the phone number right in the comments well for some of our clients that don't like email, that just give you a ring, right?
Yeah, and we've done this now, as I mentioned, for 36 years. In February will be 36 years. 12 billion plus in sales, not one customer complaint ever. You won't find it if you look. I'm very proud of that.
Wow.
It doesn't mean I haven't screwed up. I have plenty, but I make it right if I do. We do. We accept responsibility. We make it right. It's the exception to the rule, but I don't want to act like, I'm perfect.
Yeah, no business has no problems ever. Right. Nothing's perfect.
But we try and make it as perfect as can be. And, we should do this more often, and
we will absolutely do this.
You're welcome anytime, and anytime you want to have us, we're there. Right?
Without a doubt.
We'll be there.
We have a new studio that's in Boca, and so
10 minutes, 15 minutes away. That's no problem.
I work there already.
He works there. I'm here 3 days a week or so. So absolutely,
and we'll play some golf and shoot some guns and talk life. I'm happy to do it.
I taught personal defense with a handgun for 3 years full time when I lived in Nevada. So I shot competitions, and maybe we can even give you a couple pointers.
Right on.
Tweak you a little bit.
You shoot like this.
I do not shoot.
Right. That's when you know. That's when you know you're serious right there.
No, you don't want to. You don't want to create malfunctions that you don't need. So. But I can shoot upside down.
Good to meet you, man.
Absolutely, man. Absolute pleasure.
Yeah. Thank you so much, Andy Schectman.
This will be the very next viral one off the podcast, Twins, I guarantee you, because it's blown up already in my brain. So anybody else that's watching, I'm sure it's going to do the same. Make sure you hit that subscribe button. Make sure you hit the little bell icon so you get all the notifications, and definitely all
Make a comment too. I mean, if you think everything we said is total BS, tell us. We want to hear your opinion.
And if you like
where
what we
you
heard,
came up with it,
leave a $sign. If you like what you heard, leave a $sign in the comments.
And then go to info@milesfranklin.com and put your phone number in there and tell them you want to invest in something that's untraditional and contrarian.
Because you saw it here on the podcast.
You saw it here on Podcast Twins or the On Par podcast.
Right. Or On Par. So, because we are all on board. With that being said, man, we're going to go ahead and respect his time and let him go, because I'm sure this busy man has a lot to do. And but we thank everybody for
playing golf tomorrow. Didn't you hear him?
Thank everybody. I'm not mad at that.
Amen.
I might be playing this afternoon.
Of course.
Anyway, so we'll talk to you guys next week. Podcast Twins.
Podcast Twins out from the Twin Cave. Thanks for listening, everybody.
Thanks, guys.